Hi everyone, thanks for joining me on another episode of Coffee with Nick. Here we are all about using the fundamentals to find the right stocks and the technicals to find the right timing. So let's get started quickly by having a quick review of my current portfolio. So I actually put it up on my Twitter feed as well, which you can follow through Nick Love Coffee. This is my existing portfolio. Tesla is my largest position, followed by Zoom, followed by Facebook, followed by XPEV, followed by Roku, followed by NVDA, and then lastly MELI. I only had one trade yesterday, which was actually a add to my Roku position, so added another 5% to it. This was before earnings came out. Clearly, this wasn't a good idea. After earnings came out, Roku kind of came down, dropped as much. Right now, I think it dropped about 8.6% from its closing price. Earnings for MELI also came out, and it has nice bounce up about 5% or so. So let's review the charts for my portfolio. This is MELI. Like I mentioned, it had a good bounce after earnings come out. I'm not going to kind of review their earnings for now because I want to kind of focus on Roku. But MELI kind of had a nice 5% bounce. We'll see where it opens today and whether that bounce will hold, through the day. I'm not looking to immediately add it. It kind of depends a bit on where the bounce brings it to. If it breaks this point, and then it comes back down to around here, I might add to it. So that's my current plan. Is I want to see whether it can break this level first or not after trading opens. And then if it does, I might add it if it pulls back to around this level. So if it breaks about 1.1651 level and then comes back down to about 1.626 or thereabouts. Alright. So we'll see what happens. Tesla, it's been price has been kind of tight over the last 2 days. Not much change. Ever since it broke the $700 level. These are my 3 entries. Right here, here, and here. So I'm holding a reasonable profit position right now, cushion in the moment. So it's been holding this 700 plus level pretty well. So I'm just gonna hold on to my position. Definitely not adding to Tesla at this point. Just going to keep watching what happens and whether it will dip below the 700 or it continues holding above that. I'll talk about Roku at the end. Let's move to Facebook. Facebook had a nice bounce yesterday. I think it was one of the first green day, up day since earnings came out where it dropped 4%. Then it kind of dropping a little bit. And here we got a nice little wick here. Kind of bounced up over 2% today and over the 21 EMA and 10 EMA. And it got into this. I draw these two black lines based on the candle, of the first trading session after earnings came out. So this is usually what I like to do. I like to draw the high and the low points of that. So previously Facebook was under that, and then now it bounced back into this channel. So I kind of anticipate it would trade a little bit in this channel, and then my slightly more medium term view of it is that after it trades a couple of days or even a week or so, or even maybe even two weeks within this channel is likely to kind of hopefully break upwards after that, right? That's why I held on to my entire position of Facebook. I didn't sell any of it after earnings came out so far. I mentioned that in another video before. I like what I saw in the earnings report, so no intention to sell any of Facebook unless it kind of breaks my stop loss. Right now the price action yesterday was good, so we'll keep watching. NVDA. So right now I got in about 197.5 around here. So this for me this is a important line, this blue line. So I bought it after you kind of break this blue line that I drawn. This is based on this low here. So right now it's still holding pretty well above here. Yesterday's price action was pretty good as well. Going above the high of this previous candle. Right, so I'm just going to continue holding NVIDIA. Earnings is coming up, I think around 18 or so. Definitely not adding before earnings, not making the same mistake again, right, as I did with Roku. XPEV, I have a good ride so far with this one. Added around 10% of my portfolio around this level, 41.9. Added again when it broke over this 43.25 level. So right now it's holding above this level, but I saw that it traded significantly down in the Hong Kong market today at the moment. So we'll see what happens, but at this point I'm pretty comfortable with this position, not adding as well, just going to hold that. Zoom, alright, this is also a 15% position for me. So one of my 4 large positions, there are about 15% or more. So I've drawn where are my 3 entries. So my first entry was here, where it's below the 200 SMA. I typically don't like to buy if it's below the 200 SMA. I do make exceptions when it's not too far, and I have a feel like that it might go above that. The story, obviously the narrative is there's a good growth narrative around it. So I explained in another video before why I kind of like Zoom at this point, where I think its growth could come from. So I added then here, and then when it broke, I added 5% here, and then when it broke the 200 SMA, I added right here at 37.8. And then I got perhaps way too aggressive on this day, right? The candle was, price action was looking really good, strong volume and everything else. I added at 390, then it came down, and then over the next 3 days it pulled back, but the 200 SMA looked like good support for it, so I didn't do anything else. I held on to it, the whole position. Today, really strong action here, you can see here, with very good volume as well. Broke above the high of this candle over the 390 line that I drawn previously. That was why I added here. Broke that line, broke over the high of this one. So all in all, very good price action. I'm not looking to add the Zoom as well. I think this is a position I'm comfortable with. I'm going to hold it till closer to earnings, which I think is around the end of August or the early Sep. And then when it comes closer to earnings, I'll decide what I want to do with it. If I want to reduce, then obviously it depends on where the price is as well. Now Roku, bad mistake by me. I had a 5% position coming to it, which I got around here. I think 434, and then my original plan was to hold at 5% position, which I think I'm comfortable with into earnings, and see where it kind of go. My original thought was that because I've seen some really good numbers from obviously guys like Snap, Facebook, Google, especially YouTube, and then even Amazon ads. So my original feeling was like ad spend looks very strong, and that's obviously going to be a benefit Roku, given that where its business model is. And that turned out to be half right, because revenue was great for Roku, in terms of earnings. We'll look at it in a minute, but streaming hours, active users was probably lower than what was estimated. So the stock came down like 80% yesterday after earnings came out. But we'll see where the price ends up today in normal trading. This is my current plan on how I plan to handle it. We'll look at the details of earnings in a bit, but my quick 10-second summary is that if you are a long-term investor, then I probably wouldn't even do a thing. I'll be perfectly happy holding it. Obviously, I trade around my position, so I'm not always a very long-term investor into every position. So my current plan is that this was my original stop loss 390. All right. So I plan to keep this stop loss level for my first 5% tranche. So if after the first hour of trading today, I'll see where the price is, and if it's below this 390 mark, I will actually sell that 5% position. So I'll close that off. Even though long term wise, I feel like the earnings report is fantastic. I don't want to have all my capital locked up in a position where obviously you don't know where it's going to do in the short term. Even no matter how positive you are in the long term, there are always other opportunities out there as well that I want to tap into. So if it goes below this level, I'll sell my first tranche, my first 5% tranche of the position. Now, if it actually goes below this level as well, which is the 379 level, then I will sell off the entire position, the second half of the position, and close it completely. So it kind of depends a little bit on where the trading will end up. So right now I think the price is around 384, when it close after hours, so somewhere in between the two. So I'll give it an hour to see where trading takes, where trading is for the price, and then I'll decide what to do with the first 5% trend. So that's my current trading plan for this stock. Alright, now let's dive a bit more into details of the actual earnings for Roku, and where and what it kind of look like. So here's a headline from CNBC, a very dramatic headline. Roku stock sinks after company reports tight hardware margins, dramatic fall in streaming viewership, blah blah, etc. Right? Obviously, I'll read this off. Roku shares fell more than 8% in after-hours trading Wednesday after the company reported second quarter earnings that beat expectations, but showed a slowdown in streaming TV viewing and tight hardware margins. The company's total net revenue grew 81% year over year in the quarter to 645 million. All right, so I kind of pull out some, takes on Twitter about Roku's earnings. This one is one that I like, So it gives a lot more details. Revenue, like what we saw earlier, 81% up year on year. All right, gross profit is up 130% as well from year over year. EBIT, and EBITDA, up as well. I'm not going to go through all the details, right? Okay, some key ones. So one of them is obviously the platform driver of growth. Roku obviously has two key revenue sources. One is its player, and one is the platform, right? So platform, which is really where the advertising revenue is correlated to, that's up 117%. All right, you can see that player revenue is only up 1%. Right, average revenue per user growth was up 46%. Actually, that's very good, right? Streaming hours and accounts were both up like 19 and 28%, but they were below estimates, and that was one of the key reasons why actually it came down. Right, the more takes on it. So one important kind of important look at this is that although streaming hours actually came down, I think down about 1 billion hours in total. I have a chart here that is kind of nice chart that you can refer to. Here's streaming hours. So you can see it went from 18.3 billion hours in Q1 down to 17.4%. So not just it growth slow, it actually didn't grow, it actually came down. So that was actually the key thing that the market focused on, and why it punished the stock. All right, is this streaming hours. The other one is actually because in terms of active accounts, I believe the original estimate was around 2.1 or 2.2 million accounts, in terms of growth, but it only grew about 1.5 million. So growth actually kind of slowed, so you can see that the growth in active accounts has been slowing over this period of time as well. So these were the two metrics that the market focus on. Obviously, the market sometimes looks past revenue, and even profits, and look at engagement and where that is going. So it kind of punished the stock quite badly based on these two metrics. All right. So one interesting take that I think is really relevant about this, especially pertaining to the streaming hours. All right. So is this? So I look at this. Peloton holder. That's his Twitter handle. Quite pleased with Roku handings. Pretty much a strong beat and race across the board, except for a slight slowdown in streaming hours. Not sure it's slight. It's the word there, the right word, but anyway, there is a slowdown in streaming hours, so there's no denying that. All right. The good news is that Roku grew its share of the pie 19%, while competition decelerated. Pretty obvious that the trend is that linear TV is dying. So I don't think anyone disputes that. You look at this chart there. It's a bit blurry here, the picture, but I think I have that here as well. Give me a minute to get to there. Where's that chart? Oh, that's Q2 here. All right, you can see here, compared to Q1, compared to year-on-year change for Q2 traditional TV went down like 19%, you know, all TV streaming platforms was actually down 2%. This is TV viewing hours, so we're talking about streaming hours here. But Roku was up 19%. So despite streaming hours, coming down across the board, because obviously with especially in US, where more people are going out, less people are watching TV at home. So this is a trend that affected the entire industry. So streaming hours went down in total, right? So even for Roku, it went down. But obviously for Roku, it did not go quite down as much as it affects all other competitors. So traditional TV was actually down 19%. This all TV streaming platforms are down 2%. Roku's market share, so on a year-over-year basis, Roku significantly outperformed the industry, with Roku's streaming hours increasing nearly 19% globally, right? So in my view, this is what is important for the long term, is that Roku's market share is growing, right? So if you are a long-term investor, this is really what you want to focus on when you look at the streaming hours, not the fact that it actually decreased 1 billion hours sequentially from Q1, but rather that it's becoming more dominant, as a player within the entire industry, right? So second, I think there are a lot of positive things to focus on, or in terms of the report. So one of that obviously is what Mark here refers to as well. ARPU, average revenue per user, up nicely with with streaming hours down and a slight miss in active accounts. So let's refer back to this chart. So if you look at this chart, all right, average revenue per user, that's up, from $32. It's up from $32, all right, up to $36, and you can see the based on year-over-year increase, it's actually up 46%. And you can see this is not just is Roku growing its average revenue per user each quarter, the growth is actually accelerating as well. And you can see it's a pretty sharp acceleration. So increasing ability to monetize its users, it's actually helping it drive its revenue up dramatically, even when streaming hours come down, which is really what you want to see. Because one thing to realize here is that given the nature of what Roku is like, you buy a Roku device, you connect it to your TV, you're watching it, I've seen some takes around this as that they are very unlikely to lose users, from a quarter to a quarter, because unless you kind of throw out entire TV, it's not quite like, say, something like Pinterest or Facebook or Snap, where you have to log in to be actively using. And if let's say you're no longer using the app, you're no longer active user. So in this case, if you have the device at home, you have your TV, unless you kind of decide, I'm not going to watch TV anymore, I'm going to throw out my TV, well, they don't lose a lot of active accounts, to put it that way, right? So these active accounts, in my opinion, were likely to continue growing over time, but with growth, this coming down slowly, because obviously now they're really a large part of the entire US population. It's not so you don't get the same kind of growth like in previous years, and obviously there's some going to be international growth. There are in quite a couple of new countries, but at this point, that's not really driving that huge growth in the active accounts. So I kind of expect that active accounts will grow over time, but slow. Streaming hours is likely to be slightly seasonal. Like you had the COVID peak, and then once we pass the COVID, you get the streaming hours down. But it's likely to be seasonal. Perhaps it goes up a bit more in winter versus summer. Right now it's summer in the US, so that's likely a factor as well. And overall, these two are not going to show the same kind of growth over time. So what really matters now is how effective is Roku going to be when it comes to monetizing its users, and the answer, at least from what we see right now, is that it's very positive. Not only are they able to monetize that, they're monetizing that more and more effectively. So if you compare very quickly between its Q2 and Q1 report, you can see here, I'm going to refer to the Q1 report first. So this is Q1 report. Let's go back up here. So if the Q1 report, if you see, is platform revenue, and that's the one I'm really concerned about, because over time it's very clear that the player revenue is going to be a smaller and smaller percentage of the overall revenue for Roku. So it become less and less significant, and I think most investors realize that as well. They're looking at what is the recurring revenue, which is the platform revenue, which is the advertising revenue. And you can see here in Q1 they grow 101% year over year, right, in Q1. And in year 2 they were able to grow this. In Q2 they were able to grow this 117%. So not only is revenue growing for the platform, but it's actually accelerating at triple digit level, right? From 101% to 117% year over year. So from this perspective, the ability to monetize more and more successfully, uh, increasing revenue growth, likely continue growing active accounts, but slower. Streaming hours likely to have some seasonality in it. You will likely have some peaks, and come down, depending on the time of the year. My expectation is that Roku is going to continue to show strong growth over the next, at least over the next 12 to 24 months. So from that perspective, if you're a longer term investor, I would definitely not sell at this point, because these results are actually pretty outstanding, except for the fact that the user engagement metrics may have come down a bit, and like what I explained based on some of the takes we saw earlier, is that the key point to focus on as a longer term investor here will be that Roku is becoming more and more dominant within this industry. It clearly is able to monetize more and more effectively. Revenue growth is growing, accelerating, particularly for the platform. So I can't think of a reason why I want to sell if I'm a long-term investor. So I explained my trading plan and my logic given the kind of my own type of stock trading. So but even within that, like what I explained, that depends if it can actually hit certain price levels. If it doesn't, I'm happy to continue holding it for a longer term as well. We'll see what happens here. The levels I set here, particularly for this second stop loss level here, is about just slightly under 5% below the 50 SMA. We see whether Roku can hold on to that. It actually did over the last 2 times. It kind of cut under the 50 SMA. You never know. Sometimes in after hours, it shows a certain drop, but in the regular trading, it can kind of bounce back as well. So fingers crossed. All right. So that's where I am right now with my current portfolio. I hope this was helpful to you, especially if you're holding Roku as well. All right. And if you found this helpful, please help to like and share this video, and also hit that subscribe button. All right. Thanks a lot, and I'll see you soon again. Bye.